Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 21st of September. Starting off with the FTSE 100, which is poised between the 200-day line 76.35 and a May resistance line projection 77.80. Waiting for an end-of-day close outside those two parameters. Ideally, we stay above that 200-day line because that's also the area of the February resistance line, which we broke. And that's a key trend change for the market, as is being above the 200-day moving average. Obviously, we're in the run-up to the Bank of England's ongoing program of destroying the economy by raising rates too high and for too long. But let's see if they might not be tempted to raise again, as they've done it obviously in recent months. Above 77.90, looking for the top of that trend channel there from August, around the 8,000 level, which will hopefully be a target for the end of next month. On the downside, hopefully nothing lower than 75.20, the 50-day line and the floor of that August channel. Moving along to the DAX, and here you can see that we're still trying to find support, consolidating near the floor of that rising trend channel from December. That's 15,600. Got the 200-day line just below it, 15,500. If we break below the 200-day line, the risk of 15,200 at that May resistance line projection. Obviously, we'd like to see a break of the 16,000 zone to give us a retest of 16,500 again by the end of next month. RSI not looking too clever. Failure there at the RSI 50 level, so we have to factor in that we may have to break the 200-day line and head down to 15,100. The Dow is next, and here you can see that we're just playing with that October uptrend line from last year, 34,300. Below that, there's the risk of testing August support, 34,000 dead, and then down to the 200-day line, 33,700, which was also June and July support. At the moment, with the RSI at 44 and having failed at 50, probably have to factor in that we'll head down towards the 34,000 area. End of day close through 35,000 is the trigger for retesting the highs. The August peak through 35,500, but at the moment the downside seems mildly favored. Moving along to Bitcoin, which has been trying to rehabilitate itself after the highs of July. Here we're just nestled alongside the 50-day line, 27,100, and hoping that we will remain above the floor of that rising trend channel from January. That's at 26,300. Looking for that big break of the July resistance line and the 200-day moving average at 27,800 to take us up to 30,000 by the end of next month. RSI now back above the neutral 50 level at 55, so that gives us hope that we could head up at least towards the 28,000 area. Moving on to the Great British Pound, which is interesting at the moment in the sense that its weakness is suggesting that the Bank of England won't raise rates at noon today. We've got the 200-day line there at 124.30. Below that, there is not really much support. There's around 123. There's some support there from May, but otherwise, I suppose we're really looking for 120, which would signal, I suppose, the peak in interest rates. The other factor to note is that the RSI now is in the oversold area, so that's the most oversold it's been since this time last year, which is quite interesting. But even then, even if we do have a rebound, that 200-day line, 124.30, will be blocking the way. Moving on to the stocks, and good to see Ben's Creek improving. It's touched the 200-day line at 18 pence. For the first time in over a year. We haven't been above that since June last year, so quite a sea change in terms of the technicals there. Want to see this market stay above neckline resistance around 16 pence and then hopefully head up to 21 pence at the top of that rising trend channel from back in May by the end of next month. I suppose if you're cautious, you wait for an end of day close through the 200-day line to give you 21 pence plus over the next month or so. The next stock is Chariot Oil and Gas, where I had a nice, sort of like a nice positive vibe about it. Here we've broken through the 200-day line after the bear trap below the March support there at 13.25 pence. Initial target here up to 17.75, which is a November resistance line projection. If you're a fan of the shares looking for greater glory and greater recovery, then it would be up to 24 pence if you can break through the 18 pence area. And hopefully 24 pence as soon as the end of next month, given the way that we've had such a sharp rebound after that bear trap from below the 13 pence zone. Onto the stock, which I don't think I've ever heard of, actually. The next one coming up here, CT Automotive, but we may have a rising trend channel base here, the top of the channel there at 63 pence, which obviously seems to be quite a long way away at the moment. We've got a rising 50-day line, and we've gapped up today, so those are all the things we like as a potential sign of recovery. Neckline resistance there at 45 pence, so I want to see an end-of-day close above that to then go for the 63 pence target as soon as the end of next month. Moving along to a stock which I think I did cover at the lows, and it's good to see that it's moving along nicely. It was a rather unlikely call, I suppose. Falanx Cybersecurity. Here we had the shares hit that target at 33 pence. Above the 33 pence level, we could still see 57 or 58 pence, I suppose, barring any big profit taking in the meantime. But above 33, we're still looking for at least retesting recent highs above 45 pence and then up to the upper 50s by the end of next month. On to Hemogenics, which has been one of the recent risers with good news and good investments from, I think, a stake builder there. And here we've got the situation where we are trading around our initial target here, 2.6 pence, and still looking for the shares to fill the gap over the next couple of weeks. That gap down there from the end of January at 3 pence. And the upside valid here, while we hold above the resistance on the way down around the 2.4 pence level. Next stock is a requested stock, which has done well over the recent past, probably possibly better than I expected, actually. But here we've got IQai in a rising trend channel, and the rally started with an unfilled gap to the upside through the 50-day line, which is what tends to happen in the best situations. Looking for 6.5 pence by the end of next month or sooner, while we remain above the initial September resistance zone at 4.5. If you're a fan of the shares and think that this could be the big winner, then I will draw a line which might make you feel good. It comes back from as long ago as this time last year. That's heading for 10 pence, maybe as a 1 to 2 month target, and obviously looking for that while we remain above the 4.5 pence zone. So let's see if IQai can get up to 10 pence over the course of the autumn. Stock which has been rising vertically is Myselx, and here I suppose it's a bit late to join the party because there's not really much charting furniture to go by, but we have a rising trend channel there from December, the resistance line projection heading for 90 pence, and we're looking for that really while we remain above the low 60s, basically yesterday's resistance area. Next stock is one which doesn't get much airplay or airtime anywhere at the moment, but it's Neometals, which came up with an RNS today. Shares still giving the impression that they're trying to find a bottom in the low 20s. Really want to see the stock break the 50-day line at 26 pence, and then that would open up a potential move to the low 40s. But still early days yet, even though we've got a bullish divergence line in there since as long ago as March. Best call of the recent past has been in Orcadian Energy, and great fundamental and technical win here. The stock hit our optimistic target there at 14 pence. Above 14, we're looking for as much as 25 pence by the end of next month once the dust settles here. Upside valid while we hold above that old August peak there at 11.5 pence, but ideally we stay above 14. Which was and is that late March resistance line projection. Punter's favourite is next, comes in the form of Premier African, and here we're hoping for the shares to zigzag within a rising trend channel from June. The base of that channel just below 0.4 pence, the top of that channel up to 0.7 pence, which adds up, given the way that that would fill, a move there would fill the gap down that we had from back in June. Upside valid while we hold above the recent consolidation at and above the 50-day moving average at 0.46, above 0.46, looking for 0.7 pence there. Can't get enough of the next stock, which is Silver Bullet. Here it looks like we're getting into a flag formation in the 80s and upper 80s, in fact. Our old target there, 85 pence. Above that, we're looking for the shares to head up as high as £1.40 by the end of next month. Obviously, not quite sure what the fundamentals say on that, but at the moment, above the mid-80s, looking for as high as 140 on Silver Bullet. On to the last two. First one is Scancell, which where we were hoping the shares would keep going after the news, which people anticipated rather well, as you can see on the chart. The ideal scenario here is that while we're above our initial target here at 15 pence, we could head up to 24 pence by the end of next month, and obviously that would take the shares back towards year highs. Finishing off with Vela, where the shares have spiked up. Good consolidation here above a rising 50-day line. That's been going on since the end of July, so that's a positive tick. And a break of the neckline resistance there around the 0.025 level could give the shares a move up to 0.035 by the end of next month. But ideally we hold above 0.022 in the meantime. These fiddly numbers are slightly frustrating. That's it from me today. More updates tomorrow.